Dear students, this is a video on session 5 of Royalty Accounts unit. In this video, I am going to explain how do we calculate sales and how to pass journal entries when minimum rent account is not required. So let's look into the problem. Shukla, he is an author and he has written a book on accountancy and he has got it published by Chand Publishers. Okay, so the terms of royalty agreement are, royalty is 5 rupees per copy sold. So sales into 5 rupees will give you royalty, but in the question they have given you production, number of copies printed, that is output or production, and closing stock. So it means you have to calculate sales on the basis of given information because your royalty is based on sales. So royalty is based on sales, 5 rupees per copy sold. Minimum rent is 15,000 per annum. Right to recover short workings is first 3 years only. Okay, so only first 3 years you can recover the short workings. Pass necessary journal entries. That means you don't have to prepare any minimum rent account, or minimum rent account is not required in this problem. Necessary journal entries means minimum rent account not required. If minimum rent account is required, they will specifically give prepare minimum rent account. Okay. So, how do we calculate sales? The formula for calculation of sales is opening stock plus production minus closing stock. Okay, so it means, say for example 100 books are there in the godown, 3000 books you have produced. So in the godown at the end of the year, how many books should be there? 3100. But at the end of the year, there are only 200 books in the godown. So what happened to the remaining books? The remaining books are sold. Okay, so that's why it is opening stock plus production minus closing stock gives you sales. So this is the formula. Now production and closing stock are given in the question. Number of books printed and closing stock are given in the question. How do you get opening stock? Closing stock of 2015 is opening stock for 2016. Closing stock for 2016 is opening stock for 2017. Closing stock of 2017 is opening stock for 2018. Since they have entered into the agreement in the year 2015, for the first year there will be no opening stock. Okay, the production starts from 2015, so closing stock also will come only at the end of the year, that is 2015, and then for 2016 you will have opening stock, but in the first year there will be no opening stock. Okay, I hope you have understood how do we calculate sales. So 0 plus 2000 minus 100, 1900, 100 plus 3000, 3100 minus 200, 2900, 200 plus 4000, 4200 minus 400, 3800, and 400 plus 5000, 5400 minus 500, 4900. Okay, now analysis table. So here sales we have calculated in the previous slide. So you have seen how to calculate sales, so the same thing you will copy here. So sales into 5 rupees will give you royalty. So 1900 into 5 rupees 9500, 2900 into 5 rupees 14500, 3800 into 5 19000, 4900 into 5 24500. Minimum rent is 15,000 per annum. It is given in the question, so you will write it as it is. Now what is short workings? Short working is excess of minimum rent over royalty. When minimum rent is more than royalty, the difference between these two will give you short workings. So 15,000 minus 9,500, 5,500, 15,000 minus 14,500, 500 rupees. Now here we don't have short workings because royalty is more than minimum rent. Here also royalty is more than minimum rent, so no short workings. Now what is short workings recovered? So whatever extra we have paid in the first 2 years, we can recover it in the third year. Okay, so first 2 years we have paid 6,000 extra. Third year we can recover that. Only first 3 years time is given to us. Bari first 3 ವರ್ಷದಲ್ಲಿ ಮಾತ್ರ ರಿಕವರ್ ಮಾಡ್ಕೋಬೇಕು, ಆಮೇಲೆ ನಮಗೆ ಎಕ್ಸ್ಟ್ರಾ ಇದ್ರೂ ರಿಕವರ್ ಮಾಡ್ಕೊಳ್ಳೋಂಗಿಲ್ಲ ಅಂತ ಅರ್ಥ. So time to recoup short workings is only first 3 years. So that's why in the third year you are recovering it. How much are you recovering? 19,000 minus 15,000, 4,000 you can recover. It means you are supposed to pay 19,000, but just because you have paid extra in the previous year, 4,000 you are keeping with yourself and you are paying 15,000 to the owner, okay, to the author. So 19,000 minus 15,000, 4,000 you are recovering. So 6,000 extra you had paid, 4,000 you recovered, okay, and 2,000 is irrecovered. 6,000 minus 4,000, 2,000 is irrecovered. Now when will this irrecovery come? Whenever the time is over. First 3 years you had time to recover, so the time period is over here, and that's why you are writing irrecovery in the year when the time given is over. First 3 years you had to recover, so third year is over, and that's why your recovery of 2000 you are writing. How did you get 2000? 6000, 5500 plus 500 is 6000, minus 4000 is 2000. Okay, so here you are supposed to pay 24,500 and there is no time to recover. That's why you're not recovering anything and you're paying completely 24,500. If you had time to recover, you could have used this amount to recover it. Okay, I hope analysis table is clear. Let's move on to journal entries. Now first 2 years you have short workings and minimum rent account is not required. So the journal entry will be this one. Short workings exist, minimum rent account not required. So these journal entries you will pass. Okay. So royalty account debtor to lessor is standard. You can see royalty account debtor to lessor is standard. But whenever short working is there, short working account debit is written in the first entry. Okay, so whenever short working recovery is there, in the second entry you will write 2 short workings. So when nothing is there, you will write royalty account debtor to lessor, lessor to bank, P&L to royalty if it is based on sales. So first year 2015 and 2016 you have short working, so the entry will be royalty account debtor, short workings account debtor to lessor, lessor's account debtor to bank, P&L account debtor to royalty. Why P&L account? Because here royalty is calculated on the basis of sales. If it was calculated on the basis of production or output, you would have written production account debtor to royalty. Now, first year, royalty account debtor, short workings account debtor to lessor account, lessor's account debtor to bank, P&L account debtor to royalty. Now, how do you write the amounts? Royalty is 9,500, short working is 5,500, cash paid is 15,000. 9,500, 5,500, 15,000. Royalty column amount, short workings column amount, and cash paid column amount. Lessor's account debtor to bank, same amount, cash paid column amount. Okay, and P&L account debtor to royalty, this royalty column amount, which is 9,500. Okay, next 2016 again, royalty is 14,500, 500 is short workings, amount paid is 15,000. So royalty is 14,500, 500 is short workings, amount paid is 15,000. So lessor's account debtor to bank is again 15,000, the same amount, cash paid column amount, and P&L account debtor to royalty amount, which is 14,500. Okay, so I hope first 2 years journal entries are clear. Third year you have recovery. So whenever you have recovery and irrecovery also is there, so the entries will be this one, recovery entries. So royalty account debtor to lessor is standard, royalty to lessor. If short working is there, short working would have been debited, but here recovery is there. That's why you're writing in the second entry, you're writing 2 short workings. That's all. Okay, so royalty account debtor to lessor, lessor's account debtor to bank, 2 short workings because recovery is there. P&L account debtor to royalty, because royalty is based on sales, you are writing P&L account debtor to royalty. And fourth entry also you are supposed to write for 2017 because there is short workings irrecovery. Short workings irrecovery irodrinda fourth entry on the additional barita idira 2017 ali. So you can see royalty to lessor, lessors to bank to short workings, P&L account debtor to royalty, P&L account debtor to short workings. Now, what is the amount that you are supposed to write here? The royalty amount. How much is royalty for 2017? Royalty is 19,000 and recovery is 4,000. 15,000 is paid. So royalty is 19,000. You write the same amount here in the first entry, 19,000, 19,000. Lessor's account debtor 19,000. You'll write the same amount. Here you had written 2 lessor's account. Here you'll write lessor's account debtor 19,000. To bank you are paying 15,000. 4,000 you are recovering. So to bank will be 15,000. To short workings recovery will be 4,000 rupees. So next P&L account debtor to royalty, the same royalty amount should be written 19,000, 19,000. P&L account debtor to short workings irrecovered column amount should be written. Short workings irrecovered column amount will be 2,000 for the year 2017. That amount you should write here. Okay, so I hope you have understood. Royalty account debtor to lessor, royalty amount. Lessor's account debtor is cash paid column amount. To bank, lessor's account debtor this amount 19,000, and to bank will be cash paid column amount. 4,000 will be short workings recovered column amount. P&L account debtor to royalty, you will have to write royalty amount, and P&L account debtor to short workings irrecovered column amount. So let's move on to the year 2018. So you have neither short workings nor recovery. There is no amount in short workings column nor recovery column. At that time the entry will be this one, royalty to lessor, lessors to bank, and P&L account debtor to royalty. So royalty account debtor to lessor, lessor's account debtor to bank, P&L account debtor to royalty. Amount will be royalty amount 24,500, amount paid is also 24,500, so the same amount will be written here. 24,500 royalty account debtor to lessor, lessor's account debtor to bank is the same amount 24,500, P&L account debtor to royalty is again 24,500. So here we come to the end of these journal entries. I hope you have understood this particular problem. If you have any doubts, kindly drop a comment in the comment section below. Thank you so much.